Welcome back everyone, and in this video, we are going over the top 6 growth stocks to take a look at this week. We have a very busy week of trading ahead. There are huge investor day presentations, earnings reports, and major events that are all expected to impact the stock market. And every Sunday, we go over the best companies to have on your watch list for the upcoming week. This is a recurring series on the channel, and I hope these videos give you a preview of what is going on over the next few days in the market. And before we jump into the first stock in today's video, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and sell, and any major market news. So please hit the like button, subscribe for daily videos, and now we are going to jump straight in to the first stock to have on your watch list this week, and that is Disney. Ticker DIS currently trades for $181 per share, and over the past year, the company has climbed up just over 28%. Their current market cap is $328 billion, and their company has transitioned to focus on Disney Plus, their fast-growing subscription model. And why they're included in this week's video is because the company reports their latest earnings on February 11th after market close. And we're expecting revenue to come in at around $15.8 billion and a loss per share of 38 cents. So the pandemic has been very hard for Disney. With all their theme parks shut down, that was a large part of their revenue that got completely closed. But their new subscription-based model has been a massive success. And taking a look at the numbers, by 2024, we were expecting up to 260 million paid subscribers. And currently right now, about a year after launch, the platform has over 70 million paid users. And taking a look, before the platform was even launched, analysts were predicting between 60 and 90 million subscribers by 2024. 1 year after launch to where we are today, they have more than 70 million already. So this new estimate of 260 million is way above what they were previously predicting. And I think Disney can do it. The company has changed their corporate focus and is now prioritizing the streaming service. And over the long term, this can be a very profitable aspect of the overall Disney ecosystem. And we did get some good news about their theme parks and the reopening maybe earlier than expected. Legislators are introducing a bill that may allow the large theme parks, including Disneyland, to reopen earlier in California. So hopefully this is all some good news that will allow Disney to continue to grow over the long term. So definitely take a look at this company. If you believe that their streaming service is going to lead to a bright future and eventual reopen of the theme parks all across the globe, this may be a great time to buy into this fast growth company. And like I mentioned, they report earnings on February 11th after market close with a revenue estimate of over $15 billion. And taking a look, even through the tough time that we're seeing, their total revenue has been somewhat level to where they were before. Year-end 2019, pretty much before the pandemic took over our lives, they generated around $70 billion of total revenue. But in the trailing 12 months, only around $65 billion of total revenue. So a slight decline, even though a large part of their revenue sources, such as the theme parks, have been shut down over the past few months. And taking a look going forward, over the fiscal year of 2022, we're predicting more than 23% annual revenue growth from Disney, which would be absolutely incredible. And over the next 5 years, we're expecting 41.5% per year growth. Not a total growth. Analysts are predicting 40% per year growth over the next 5 years from this entertainment giant. So definitely take a look at Disney this week. If the earnings disappoint and we see a dip in share price, it may be a great buying opportunity for this big name company. And now if we jump straight in to the next stock in today's video, we have PayPal. Ticker PYPL. They currently trade at $270 and they have been on a massive run up, growing 125% over the trailing 12 months. Their current market cap is $315 billion, and this is a leader in the financial tech sector. PayPal is included in this week's episode because on February 11th, they are hosting their Investor Day presentation. And this is a big deal for PayPal. It is their first major event in 3 years, and they're expected to provide a 3 to 5 year financial outlook going forward. And I am personally expecting the future guidance to be very strong. We have seen a massive transition into e-commerce over the past year, and PayPal is a leading name in the financial tech sector. And if we take a look at their income statement, over the past 5 years, this company has posted some massive numbers. Each and every year, their total revenue continues to grow with over $21.4 billion in annual revenue in the trailing 12 months. And taking a look at the chart, continuous upward momentum. And this company is also very profitable. Taking a look at their net income, each and every year, it continues to grow like clockwork with over $4.2 billion in the trailing 12 months as well. So over this past year, during the height of a global pandemic, this company saw a mass expansion in their total net income. That is such a positive sign from this fast-growing fintech giant. And going forward, for the fiscal year of 2022, analysts are expecting more than 20% total sales growth. And for the next 5 years in the future, we're expecting more than 23% per year growth from PayPal over the longer term. So this company, although they've been on a massive run-up, is still expected to climb even higher, and I believe this Investor Day presentation can bring a ton of confidence to investors in PayPal as a whole. And now if we jump over to the third company in today's episode, we have DraftKings, ticker DKNG, a leader in the online gambling industry, currently trades for $63 per share. And over the past year, the company has seen some mass expansion, going from around $13 to over $63, where it sits today. Their current market cap is $25 billion, and of course, why they're mentioned in this week's episode is because of the Super Bowl. The Super Bowl is later today, and as a whole, this may be the largest sporting event of the year within North America. And the fact that now in over 20 states, you can legally gamble on this event, I believe companies like DraftKings are going to see a major benefit. And taking a look, the momentum in the online sports betting sector continues to climb, and that is sending DraftKings even higher. And I believe that's not going to slow down anytime soon. As more states legalize online sports gambling, DraftKings and many other online digital-first companies are expected to see some huge expansion. And analysts are expecting 56% growth over the 2021 fiscal year for their annual revenue. And taking a look going forward, we're predicting 40% per year growth in DraftKings over the next 5 years in the future. So a ton of future expected growth, and I personally believe that DraftKings and the entire online sports gambling industry is very early on in their growth stage and still has a ton of future upside moving forward. So definitely take a look at DraftKings over this upcoming week, especially with all the aftermath that the Super Bowl will provide. And going forward, we're going to move over into the fourth stock in today's video, and that is Apple, the largest company in the world, worth $2.3 trillion, and their share price currently sits at 136. Over the past year, the company is up just slightly over 70%, and they have the potential to climb even higher. The company just reported a record-breaking quarter with $111 billion of quarterly revenue, setting an all-time high for Apple in its entire history. And that quarterly revenue is only expected to grow for many years in the future. But that is not the reason why they're included in this week's episode. Some new news coming out regarding Apple is the future growth of an Apple car, a fully autonomous vehicle. And Kia is reportedly seeking partners to build Apple's electric vehicles within Georgia. And why that's important for this upcoming week is because Kia Motors is hosting their Investor Day presentation on February 9th. And at this event, we're expecting to get an update relating to Apple and the Apple car productions for 2024. So if Kia is the true partner for Apple and the development of the Apple iCar, I believe this Investor Day will give a future insight into the production levels, when we're expecting them to hit the market, and even some design capabilities of what Apple is going to produce. So definitely take a look at Apple this week. Kia Motors, of course, is their partner, and that's who's hosting the Investor Day. But I think as a whole, that can really relate back to Apple stock and may have a huge impact in the trading over the next few days. And for me personally, Apple is the largest holding in my portfolio. I own 101 shares, worth just under $14,000. So this is a company I will closely be following over the next week, and with their new partnership with Kia Motors, I can't wait to see that Investor Day presentation to hopefully learn more about the Apple car and that may impact the share price of the largest company in the world. And now if we continue on and jump straight in to the fifth stock in this episode, we have a high-flying e-commerce company called MercadoLibre. Ticker MELI, currently trades for over $1,900 per share. But of course remember, with fractional trading, which is offered on most brokerages now, you can buy in for as little as $1. And the company has grown by over 180% over the past year, and their current market cap is $95 billion. And this company is considered the Amazon of South America. And they're one of the fastest growing e-commerce platforms in the world. And they're included in this episode because they report earnings early on this week as well, and we have a revenue estimate of $1.22 billion and earnings per share of 14 cents. And taking a look at their income statement and historical growth, we can see year over year, the total revenue for this business continues to climb. And with the pandemic, we've actually seen a massive uptick in trailing 12 months revenue, which now sits at $3.3 billion. And going forward, again, another company with massive future growth expectations coming from analysts. We can see for the full year 2021, we're expecting a 41% annual sales growth rate, and the average estimate for revenue is coming in at around $5.5 billion. And going forward over the next 5 years, we're expecting close to 20.5% per year growth from this e-commerce platform going forward. So definitely take a look at MercadoLibre this week if you want some international exposure to a company that is a tech-based name focused on e-commerce. This is definitely a company to have on your watch list, and if we see any dips over the next week, it may lead to a great buying opportunity. And now we have finally made it to the sixth and final company we're going to go over today, and that is Pepsi. This is a long-term blue chip dividend paying company that currently trades for $140. Over the past month, they have seen a slight decline of around 3%, and over the trailing 12 months, the company is down around 2.3% overall. Their current market cap is $194 billion with a dividend yield of 2.9%. We all know this company. They are one of the leaders in the beverage and snack food industry, and I believe they will continue to dominate that market for decades in the future. And they're included in this week's episode because they report earnings on February 11th before the market opens. We have a revenue estimate of $21.7 billion with earnings per share of $1.46. Pepsi has been around for decades, and they have a current dividend growth streak of 48 years, meaning through every good and bad time, they continue to reward investors not only with a cash dividend, but they increase that payment each and every year. So if we take a look at that 2.9% yield, it makes up around 74% of their total payout ratio, and they grow it at close to 8% per year over the past 5 years. So this is another blue chip dividend name that I own in my portfolio as well, and currently at this level, I own 29 shares with a market value of just over $4,000. And if we see a dip, if Pepsi misses on their earnings, I may add to this position over this upcoming week. So thank you for watching, everyone. I am the Gen Z Investor. Every single Sunday, we go over the top names to have on your watch list for the upcoming week. And these are the companies with either an earnings report, an investor day presentation, a product launch, a major event, or anything that could happen over the upcoming 5 to 7 days that will impact the company's share price, leading to a nice buying opportunity. So definitely take a look at some of the big names we went over in today's video. Thank you for watching, and see you in tomorrow's episode.